will be moving to the operating profit margin of the same company. The impact of depreciation and amortizations, we see that the operating profit margin is lower in the most recent year. We have already denoted the reasons for the lower margin, and we need to take a closer look at the operating expense and fixed asset purchases. If you look at the interest cost, interest and other income, since these numbers are marginal, and I won't be taking a deep dive into these numbers. You see the significant non-recurring income as expenses or any other income means we have to interpret it. Income tax expenses. This point, tax on the income statement is different from tax that is actually reported and paid. This is because there are different rules for tax and accounting. For example, if a company has an investor, the owner might be inclined to use a faster depreciation method so that they can deduct income and pay less taxes. Meanwhile, they might use a slower depreciation method on the income statement so that it reports higher net income. Net profit margin, as you can see, depreciation, interest, other income and taxes make it harder to judge net income and other income. It is important to analyze the EBITDA, the operating expenses. Of course, the both are EBITDA and EBIT are the operating expenses. In India, we take the EBITDA as operating expense, operating income for analysis purposes. Of course, both are right. Both are operating income. For analysis purpose, we are taking EBITDA. Why did selling general and administrative expenses increase in 2017? The interpretation found in the notes in relation to that. Notes means the notes to the account. Below the financial statement of every company, there will be notes on account. In that, the detailed explanations will be there of the each and every line item of the in the financial statement. Say for example, depreciations or interest expenses, selling and distribution expenses, total income. For each and every line item, there will be a notes to account for the detailed explanations. So in the year 2017, why did SGA increase? It found in the notes in relation to that the increase in SGA expenses was primarily the result of increases in delivery cost and the sales commissions, which resulted from higher sales, and incremental fixed cost resulting from the acquisition of Spill Magic assets. As the company acquired the Spill Magic assets and a higher headcount, which include compensation and recruiting cost. So higher commission is no surprise since it moves with the revenue, and the revenue went up in 2017. What's more interesting is the acquisition of Spill Magic assets and higher headcount, including recruiting cost. That's why it went up. Why are fixed assets higher? The notes does not explain what the addition to fixed assets was for. It's related to the Spill Magic assets that Acme acquired in February 2017. That is the reason the fixed assets increased in the year.